Today, we're going to talk about Rocketlab, a pure-play stock on rockets and a direct competitor to SpaceX. The number of companies going public is becoming overwhelming. We largely cover US initial public offerings, and 30% of them this year, measured by proceeds, have been special purpose acquisition companies, or SPACs. But here's the really interesting metric. If the data provided by stockanalysis.com is to be believed, there have been 1991 IPOs on the US stock market in 2021. We only add that disclaimer because there are so many different numbers floating around. On the slide, you see a chart from Statista showing the number of IPOs over the last 21 years. If that data is to be believed, that means there have been more IPOs this year than in both years of peak dot-bomb times. We're spoiled for choice when it comes to new positions for our current portfolio of 34 tech stocks. We're close to our proposed limit of 36 stocks, so we need to very carefully consider any potential additions. One theme we haven't placed any chips on is the space industry. In addition to OG satellite and spacecraft companies, retail investors now have a dozen space stocks to choose from that have all begun trading on the public market in a very short period of time. Using our nifty disruptive tech stock catalog, we can very quickly see how space SPACs have fared so far. Since all SPACs are initially priced at $10 a share, you can very quickly see relative performance. Confusing short-term price appreciation with the quality of the underlying business is a rookie move, but these tables are always fun to look at. We can also use this data to stroke the frail egos of our underpaid research team. Risk-hungry investors always want to hear about stock picks that generate alpha, but equally important are the stocks that you don't invest in that end up hitting the skids. Since we warned about Momentus, their CEO has been indicted by the feds and shares have fallen 38%. After we dumped Spire because we have a thing for Planet, shares fell 54%. With Planet being the clear leader in the Earth observation space, why would an investor consider companies playing second fiddle? Of the SPACs in this list, the only space company we might really want a piece of, at least once the reverse merger completes, is Planet. But there are also several companies we'd like to take a closer look at now that the SPAC mergers are done and dusted. One of those is Rocketlab, which is developing a launch service focused on small satellites. This past March, we published a piece titled Rocketlab Stock Offers Pure Play on Rockets. Here's how we left things. We're on the sidelines until Rocketlab files some proper documents with the SEC that better define the risks we're taking by going long this space stock. Rocketlab has now filed some proper regulatory documents for us to peruse, so we need to decide if we want to hold the stock or not. The type of business we're investing in with Rocketlab is a company that builds rockets, then launches them into space with payloads other people have paid for. The leader in this space right now is SpaceX, and that's the first point of contention. If space launches are to become a commodity, do we really want to invest in anyone but the leader? The company that pulls ahead will quickly achieve economies of scale, which will drive down cost. On the other hand, many companies and government entities aren't happy when there's a sole provider of something important, like rocket launches. There is room for more than one player, and we know of at least 8 companies developing reusable rockets. Of those, the company that seems closest to SpaceX, at least when it comes to small rocket launches, is Rocketlab. But where Rocketlab seems to be running afoul lately is being able to launch rockets that don't blow up. In order to become a leader in launching payloads to space, you need to be launching lots of rockets. According to Rocketlab's website, the company has had 22 total launches with 3 failures. This chart from Wikipedia shows when these failures took place, the last happening in May 2021. A success rate of 86.4% is rather dismal. While failures can be expected when a company's launch services are just getting off the ground, they shouldn't persist. We can see how SpaceX had a higher prevalence of failures early on, which corrected over time. Today, SpaceX has a success rate of 97.74%, 132 launches, and 1 rocket that blew up before launch. An article by TechCrunch last year talks about how SpaceX offers a ride-share program, which allows small satellite companies to launch things into space without having to purchase an entire payload. The reduction in price was met by remarks from Rocketlab that at Rocketlab, small-sat customers are our number one business, and that's what we do. The plan is to further build out their offering to better service small-sat customers. Now let's talk about recent Rocketlab acquisitions. Planetary Space Corporation, or PSC, is the latest addition to the Space Systems portfolio after recent acquisitions of Advanced Solutions Inc., or ASI, in October 2021 and Sinclair Interplanetary in April 2020. PSC is a leading provider of mechanical separation systems and satellite dispensers. ASI provides flight-proven off-the-shelf spacecraft flight software, and Sinclair Interplanetary is a manufacturer of satellite hardware. Once PSC's financials are reflected in Rocketlab's financials, we'll have a better picture of the breakdown between the launch services and space systems segments. Concerns still remain around the gap in technological competence between SpaceX and Rocketlab. Being able to land a rocket on a small platform in the ocean is an incredible accomplishment, while Rocketlab recovered the booster from its Electron launcher for the third time several weeks ago. TechCrunch says, Rocketlab is also a step closer to executing its ultimate reusability plan, using a parachute to slow the velocity of the booster and capturing it mid-air with a helicopter. This sounds a bit archaic when you consider SpaceX is now working on a fully reusable rocket. Falcon 9, SpaceX's current partially reusable rocket, sheds its upper stage on each mission, the equivalent of a jet airplane, according to an article by Business Insider. The article says that would bring the launch price down to 1% of an expendable rocket. That is, if the company doesn't go bust trying to do it. Just hours ago, media reports have been surfacing that SpaceX is on the verge of bankruptcy, according to a leaked email from His Holiness Elon Musk. Pundits have been pointing out that he is said to have used similar scare tactics when building Tesla as well. If Starlink is indeed a $1 trillion opportunity, there's no way Mr. Musk would let SpaceX sink. Now, should you buy Rocketlab stock? We don't give any financial advice, but we give you tips on how to preserve capital. Anytime you're at an ATM in a shady part of town, always pull cash out discreetly and tuck it into your palm, hiding it from sight. Then gesture angrily at the machine. Rip that receipt out there and stare at it for about 10 seconds while dropping F-bombs. Any criminals watching you will think you didn't get any cash and you'll be robbed a lot less exiting ATMs. Openly stuffing a wad of cash into your wallet is asking for it. So back to Rocketlab stock. One approach could be to invest in Rocketlab until the opportunity arises to invest in the leader, SpaceX. We're not in a hurry to invest in the particularly risky space domain, so we'd like to wait and see how 2021 pans out and what those acquisitions look like when the financials are rolled up. Using the lower end of Rocketlab's 2021 guidance, here's what our simple calculation ratio works out to be, which is market capitalization divided by annualized revenues. So almost $7 billion divided by 57 million equals to 120. That's an extremely high valuation, and we don't touch any stock over a valuation ratio of 40, no matter how great the story is. To put that number into perspective, Rocketlab shares would need to trade at $5.14 before we consider buying them based on 2021 revenues. Smart investors don't buy into hype, and there appears to be plenty of that right now. The Rocketlab SPAC deck estimated $69 million revenues for 2021, but we all know why that didn't happen. Yes, you're right, it was the corona. Rocketlab only expects $14 million in Q4 2022 from the launch services segment, with only 2 launches taking place during that time. Space Systems revenues will be between $9 million to $11 million, with ASI acquisition included, but not PSC. The Q3 2021 update is put together very well, and it's great to see the communication improve now that they've put the SPAC merger behind them. Shooting giant containers of fuel into the sky and hoping they don't blow up is a risky business. Entire books have been written about what went wrong at NASA when the Challenger space shuttle blew up. They make you read these horribly boring stories in B school. When you understand how complex this industry is, you'll quickly wonder how it's even possible to achieve a near-perfect error rate. We like that Rocketlab is diversifying their business, but have concerns about their launch cadence, launch vehicle failures, and excessively overvalued shares. We're avoiding the stock until these metrics improve, especially the last one. Thank you for listening. If you have any comments, we'd love to hear them in the comment section below. If you enjoyed this video, please like and share it, and feel free to sign up to our channel if you'd like to see when we release new ones. Also, check out our Nanalyze Premium offering using the link in the video description. It's the definitive investment analytics service for disruptive tech investors. Talk to you later.